Welcome to Theo video for September 14th, 2016. This is Don Kaufman. We've got just about a minute to go to the close of the broader cash markets. S&P's right now down about 5, and yet another day of relatively volatile trading. If you hadn't had the time or didn't look necessarily at markets on an intraday basis, once again, it's a little bit of Mr. Toad's wild ride over here, where the S&P is traded a low of 2112, pretty much a high of about 2135. So what are we getting? We're getting range. I mean, you have to recognize, like a week ago at this time, we were begging for 4 and 5 point moves a day. Now what are we getting? 20, 30 point moves every single day. There's a few things that I want that are to point out here that I think are really definitive and extremely important in the days to come. Number one, I'm just going to tell you flat out, likely to test the 2100 level inside of the S&P futures. So let's just back up for a moment on this chart and look at some of the recent intraday trade. We'll go back, for example, just 5 days. Okay, we'll pull this up on the 30-minute chart just so you get a quick glance on a broader spectrum of some of the action that we've seen. So volatility kicks in last Friday. We come down fairly hard. We touch into the 2100 level, and it holds. We rally all the way back up to what was the old 2160. Okay, this line is actually drawn now. There's the bell. This line now is drawn at 2153. So we actually touch, okay, what was a key support in market, which became then, of course, resistance there, the 2153 level. Coming off pretty hard and fast over here, but really the last 2 trading days have been met with very much range-bound trade. We actually bounced, okay, both yesterday and today, right here at this 2112. It held in place. And when you start getting degrees of volatility over here, all right, you better believe there's a lot of hedging activity, and there's a huge amount of support and or resistance. So 2112, it held barely. Okay. However, we still think that 2100 is going to be pretty apparent before this bout of volatility really plays out. Now, let's go to a couple of areas that maybe the rest of the street isn't looking at. I mean, could we point Apple out over here? Sure, it's news. I mean, there's nothing more, nothing less. iPhone sales initially, they look good. Okay, there was actually a report. Verizon sales haven't necessarily picked up all that much, but again, you're seeing Apple explode to the upside. Neither here nor there. I mean, the one thing that is, I guess, interesting about it is just the sheer size of the number of option contracts that have traded in Apple today. Is 2 million option contracts just traded in Apple. Again, phenomenal size in there. But that's neither here nor there. That had its huge impact to the NASDAQ futures. Okay, held markets together. But again, we still saw the S&Ps touch that kind of recent low over there and bounce off that 2112 level. Again, still believe the S&P futures here, those December futures, very likely to touch directly into that 2100 level in the next few days. All right, with that, I think there's a couple of areas that traders are not necessarily watching. One of those happens to belong to the VVIX. Now, anytime that there's a bout of volatility and it starts to kind of pick up out there, you got to start looking at the VVIX, because what this product happens to be, it's the volatility of the VIX. You know, everybody like mentions the VIX. They look at the VIX, mention the VIX, but they don't necessarily know what this VVIX is. You see, the VIX is an equation, right? It's at 1764. When I say it's an equation based, okay, on the volatility of options in the SPX. And those options that are in the SPX, the VIX equation, all it really does is kind of measures options that are right around a 30-day, okay, expiration. So if you take a look at, 23 days, 28 days, 30 days, 36 days, they average all these options together to come up with the VIX. And you can see right here, this is a 30-day option. It's at what, 17.43. The VIX is at 1763. Again, it's just a time-weighted average they use for the VIX. But what so few people are looking at that I think you really need to take into account, because this is a professional traded product, is the VIX product itself, because these VIX options are not based on the VIX. They're not based on the VIX. The VIX is just an equation. The VIX options are actually based on these volatility futures. And the one interesting and both entertaining thing about the VIX options is that their volatility, kind of day in and day out, has gone up. How do we measure the volatility of the VIX options themselves? Well, you measure it by looking at the VVIX. And what this is telling you is that professional traders out there, they're still bidding up volatility. Okay? Professional trade out there is saying we still see risk. We feel risk is still not only coming, it's imminent. So we have a day today that seems pretty docile. Yeah, market's kind of chilled out a little bit. We had what we kind of term kind of an inside trading session. You know, even though I talked about a decent sized range, hey, the previous days have been wild. Monday exploded to the upside. Tuesday, okay, gave most of it back. Okay, here we are Wednesday. All right, the S&Ps are almost unchanged, almost massively unchanged. Nevertheless, the VVIX still getting lit up. And you got to remember this. You see the VVIX above 110, it means duck and cover. It means get under your desk, hold the monitor, keep your helmet on, we're going in. And it's, again, we have not seen this volatility play out. In the coming days over here, you got to realize what volatility means. It doesn't just mean we're going down. Okay? Volatility also equates to uncertainty. In the coming days, I think you can fully expect something we have not seen a tremendous amount of, and that's this. You have quite a bit of news that's on the horizon. For example, tomorrow morning, you're actually going to get an announcement specifically from the Bank of England. All right, that may have an impact over there. It's more quantitative easing. Well, we're also going to learn some of the impact of the Brexit. But you have to be very leery in the coming days of a major move in the S&Ps in the overnight market. We have not seen that. You know, if you think about last Friday, and again, this is stuff that's relative to traders that they're not looking for. The VVIX is totally lit. Okay? So somebody in the professional trading world clearly believes that volatility, okay, is imminent at this point. Now, we haven't really seen massive moves kind of an overnight trade. Last Friday when the market opened, the market was down like 13 handles and it sold off during the trading session. On Monday, okay, the market didn't give us that much of an indication of the rally, but rallied during the trading session. On Tuesday, sure, the market was off a couple of points. We haven't woken up, though, to a day where the S&Ps are down 30 handles. I know that that's an intimidating number, but that's a very plausible, very likely scenario for what we're going to see to break through the 2100 level. Again, especially given the fact that there's a number of announcements due out between now and Friday. I'm also going to bring up a couple other areas that I don't think a ton of traders are looking at. Let's cruise over to the XLE. What is it? For those of you unaware, the XLE happens to be the energy sector. Oil breaking down. Lots of traders are looking at oil there. It's breaking down. But finally, the XLE is following suit. It broke through what we would call, for the most part, some short-term kind of resistance over here at the 68 level, but it crossed through it like nothing. This is going to be incredibly important to watch. It's one of the larger sectors in the S&P. To continue with that, got to look at the XLF. The XLF, a 7-cent move today. Doesn't sound like much, but it's 0.3%. The XLF has actually been on the leading edge of most of this down move. I'll have you note the XLF was cresting up here to the 24 against 64 level. Okay, off again right now, trading into the mid 23 handle. On a percentage basis, still a fairly substantial move. If you take a look at the XLF and you compare it again to the S&Ps, all right, you will see the XLF is right on the forefront of this move. So take it from the XLF over here. It is still leading markets, and in this particular case, leading us quite a bit lower. Volatility in the XLF also up above 20%. Last but not least, I think this marketplace doesn't necessarily get any love. It's, the spider utilities. Now, why would I bring up the utilities? Because this has predominantly been thought of as a defensive sector. The real reason I'm bringing up the utilities is it's not really on anybody's radar screen. These are the dividend payers out there. If you looked at the XLU, it includes, the utilities just about dividends. Okay, this particular ETF pays 3.37%. And what's interesting about the dividend payers over here, okay, they've been on the downward trajectory since what? Okay, early July. They had a small uptick today, but again, I don't think this is on many people's radar screen. And the reason I'm bringing it up, I'll have you note, the dividend payers that are supposed to be what's considered a low volatility product. In fact, there's a bunch of new mutual funds that popped up over the last 18 months to 2 years, and those mutual funds are all about the cornerstone of low volatility. Guess what? Their volatility is higher than the general marketplace, considerably so. And the utilities and other dividend-paying stocks are coming off hard and fast. We're going to watch those really carefully some of the coming days, because again, these are thought of as, what they term risk-on, risk-off assets. Well, if there's going to be a bit of a liquidation event, they're going to hit them all. And watching dividend payers getting hammered here a little bit is quite disconcerting at this point. Again, look for the 2100 level inside of the S&Ps. Now, mark it in your head. You're only 17 handles off of that. The other thing, if we do get a decent upside move, okay, in the next day or two, sell into it. If we get a decent upside move in the next day or two, sell into it. Specifically, one of the positions I'm looking to take, if Google can actually pull its head closer to the 800 level, I'm going to be looking for an in-out spread specific to Google. Again, we move up. It's an opportunity at this point to sell. The words buy the dip, they're going to be off the charts for at least the time being. Thanks everybody for joining us here at TheoTrade. Have a great evening. Bye-bye.